Okay, hi everyone. Welcome back. You're watching The Money Show on ET now with me, Mubina Kapasi. The show is dedicated to all your personal finance related questions and queries, and we are going to get straight to that. Today, we are going to be talking about the new tax forms that have been released. This is for assessment year 2020-2021. That means once March 2020 comes and the financial year 2020 is over, we will be entering financial year 2021, or essentially speaking, assessment year 2020-21 for FY20. It may sound a bit of a complicated, jingo, but the point is that at the end of every financial year, the government releases these returns, which you and I fill before the 31st of July, or in some years before the 31st of August, if the government has delayed that, or rather postponed the last date to file your return. And this time around, there are a whole new host of disclosures that the government has asked for when you will file your tax returns. What are they? What sort of documents you should have ready with you to avoid any inordinate delay? To talk about all of that, and of course to answer any questions or queries you may have with respect to taxation, how you can save tax, how can you plan your tax, I have with me Mayur Shah. He's a partner with EY India. Mayur, thanks so much for joining us on The Money Show. I suppose given that most of our viewers very commonly maybe using either ITR1 or perhaps even an ITR4 if they have a business and profession, and any which ways the government as well has notified these two returns, we'll keep our focus on that. So let's start off with ITR1. One particularly interesting inclusion that I see is that you have to mention your passport number. So let's talk about each of these disclosures and what sort of documents now our viewers will have to keep ready with them when they are filing their return.
Yeah, so as far as Form 1 is concerned, the additional disclosure which is required is in relation to a passport number, and that's the only disclosure which has been added. As far as other disclosures are concerned, that has not been added in Form number 1. Except there are other the Form number 1 which otherwise could have been used for a property which is held in joint name, but now such Form 1 cannot be used for joint property. However, the recent press release has come which says that they are kind of rolling back this Form 1 and trying to retain as what it was, except they will continue with the passport details, and if the property is rented out, then the details of tenant needs to be provided therein, and if a person is an employee, then employer's details were to be provided, which has been added over here, and that will continue. So in all, there is not much information which has been requested. Some information only to link up with whatever tax credit they are supposed to get, or whatever, and that has been added in this form. So nothing more than that. It will only facilitate easy processing from a computer assessment point of view.
It's also interesting to note that now you have to disclose if you've, spent more than ₹1 lakh paying your electricity bills. You've taken a lot of foreign holidays, which I think exceed more than ₹2 lakh. So that means, Mayur, you will have to essentially ensure that you have all of this data ready with you when you're filing your return. So are we talking about all the 12 months of electricity bills totaled and ready with you? Are we talking about all the bills that you may have spent on foreign holidays? And when you say foreign holidays, how much are we talking? Does it include, of course, the airway bill, but it also includes the amount you spend in your foreign holidays, for the eat outs, for the entertainment abroad? Would it include all of that as well?
Yeah, sure. You have brought a very interesting point, and these changes has come in the last budget. If you recall, there was an earlier requirement based on expenditure, people who are not required to file the return because of income not enough to be reported, But now if any if any motor car vehicle or any expenditure or any jewelry or any other things were there, they were to file irrespective of the fact that they may not have any income to be offered to tax. The similar provisions has been rolled back last year for the assessment year 2021, wherein a person who has deposited 1 CR in a current bank account, or a person who has incurred expenses of 2 lakh on his foreign trip, and as you rightly said, expenditure incurred on foreign trip can include airway bills, could include entertainment overseas, could include any expenses which are incurred even for food or any other things which has been incurred, will have to be considered to determine 2 lakh rupees. And also in a year, if a person has spent 1 lakh rupees towards consumption of electricity, if any of these criteria is met, even though person may not have any income to be reported for taxation purpose, but still he is required to file his return of income, and that has to be by using ITR 4, where they have to put all this detail. It is not necessary though for all persons to report these expenses, but those who are filing return only on account of these criteria have to disclose this information and value.
Okay, understood. Is there any part of the ITR 1 that's actually been eased out now for assessees? Like, are there any disclosures now that maybe an assessee does not have to make, or is this just added disclosures for ITR 1?
So for ITR 1, I don't think there is anything which has been eased up except these few additions. But in ITR 4, earlier those who were having professional income, they were to provide some financial information which has been done away with in terms of assets and liability, which they had to disclose it in the return of income, which has been done away with in this new ITR form.
Okay. So basically, if I had a business or a profession, and I'm using that presumptive income section under the Income Tax Act, which is this 44 related sections. Earlier, from what I recollect, you have to disclose debtors,
yes,
creditors, etc. Now, what will I have to disclose?
Now what you have to disclose is, you don't have to disclose that, but what you have to disclose is bank summary in terms of the transactions which has been taken in the bank has to be reported appropriately in the return of income. Let me give you an example that you have to put opening balance, then you have to there you have to specify all the money which has been credited to that bank account, and whatever money which has been spent from the bank needs to be captured with a closing balance thereon. So these are the information which is required to be submitted in lieu of all the financial information which was to be submitted earlier. And this is with a reason to facilitate that when you are following a presumptive taxation, one of the requirement for presumptive taxation is that a normal income earned, or on a presumptive basis, whatever income comes to, whichever is higher needs to be offered to tax. By putting the bank summary and cash summary, you will be tax officer will be able to identify whether the profits which are earned are more than what has been reported in presumptive taxation. Then they will consider that profit as taxable value rather than tax based on presumption.
Okay, understood. All right. And then of course there's that eternal question with respect to the Pan-Aadhaar linking. Now, what the government has done is they've once again extended that last date. Now, I think the last date is 31st of March. So, just a warning of sorts for our viewers, if they've still not got their Aadhaar in order, what will happen? Will you be able to file your return, which obviously will be done only after 31st of March, if you don't have an Aadhaar, or if you have not linked your Aadhaar to your PAN? What are the consequences of not doing that?
No, one may be able to file the return because I don't think they can stop filing the return, except for non-compliance, whatever penal provisions will trigger on a person. And therefore, those are the consequences which can happen. In addition to that, if your income tax return is linked with Aadhaar, then a separate acknowledgement statement need not be signed and submitted to the CPC center at Bangalore. But if they have not done it, then they have to follow that additional procedure to make the filing of return valid. Otherwise, the return will render invalid.
Okay, all right. So basically, to just summarize these new forms that have been released, by the department. Firstly, I think they've released it way earlier. They've released it at the beginning of the calendar year as opposed to, at the beginning of the financial year, the next financial year, what they usually do. So I suppose, Mayur, this would be to simplify maybe, the taxpayers' process of filing the return, because now from now itself, they'll know that they have to keep certain documents ready. And secondly, do you believe that it has made the ITR filing process easier, more difficult, more complex? What is your opinion?
So, as compared to last year, I don't think it is difficult or easier. It remains the same. One thing which we need to note is that there are 4 ITR forms which individual can file. ITR 1, 2, 3 and 4. What they have notified is only with respect to ITR 1 and 4. ITR 2 and 3 is yet to be notified, and we really need to wait and watch to make any conclusive comment on this, what kind of information they need. And those are the extensive forms where lots of information is being sought, and lots of information which will be required in those forms. So we should watch and see that what kind of information they are requesting. If you see the name of this form 1 and 4, one is Sahaj and another one is Sugam, is anyway a minimum requirement which needs to be filled in Sahaj and Sugam. But the extensive one is ITR 2 and 3, and therefore we should wait to comment on this once those are released.
All right, fair enough. So there you have it, folks. These are the new ITR forms that have been released. Of course, we have to wait for ITR 2 and 3, but ITR 1 and ITR 4 are the most commonly used forms, and the government has released them well in advance. So peruse through it, and of course, I hope this interview as well has helped you understand that, look, come the 31st of March, you have 4 months. So you can, instead of waiting all the way till the 31st of March, start accumulating your documents right now, your travel documents, your electricity, because that's new, and you will need that amount to disclose in your income tax return. So I suppose the government has tried to make it easier for you as well to make all of these disclosures. Okay, on that note, we'll take a very short break right here on The Money Show. Mayur, thank you so much for joining in on this session, on this episode, and very patiently answering all those questions and queries. Folks, do come right back. We're going to be talking about the sovereign gold bond scheme and why Rakesh Jhunjhunwala believes gold will continue its rally.